How's it going, traders? Pub Wall Street back with another weekend review. Today we're going to look at our top indices and ETFs and sectors to see, what's been going on in the market. We're going to be looking at this on the weekly chart. So if you like these types of videos, please make sure you're subscribed to my channel. And if you can, please like and comment down below. Would love to hear your thoughts on my analysis. Does it align with what you're seeing? Do you have a different point of view? I'm always interested to hear other traders and investors' points of view. So if you feel like I'm talking too slow, you could watch this video on 1.5x. And please keep in mind, this is not financial advice. This is only for educational purposes only. So now that we got those pleasantries out of the way, let's dig into the charts. So first up, we're looking at, again, weekly charts, DIA. This is the Dow Jones Industrial Average. And just to clarify, the black line, that's going to be your 21 EMA. Your blue line, that's going to be your 50 SMA. And your red line, that's going to be your 200 SMA. So you can see, zooming out, we have a massive broadening formation on the Dow Jones Industrial Average. And we did break out back here, back in May of 21, right here. And we were riding this 21 simple moving or 21 exponential moving average, coming up to the top, and then we failed. And now we had that cross under the 21, under the 50. And now we're back inside that wedge. So what I'm looking at is possibly a revisit of these prior highs. So let's put out a level that's 295.61. And if we do some fib work, we take our retracement from that low to that high. You could see that aligns pretty nicely with the 382 retracement and the 200 simple moving average. So you have three areas of confluence here. You have a prior resistance level right here. You have a 200 simple moving average right here. And then you have the 382 retracement from the prior swing. So this target zone, this is what I'm going to be watching for the Dow Jones Industrial Average for a potential bounce. So just keep a close eye on that in the coming weeks. And let's see, what comes of it. But also, we are coming into oversold territory here. But if you look back here on that COVID drop, that sent us pretty deep in terms of oversold territory. We also did have a weekly squeeze fire to the downside. Very important to watch these higher time frame squeezes. They can be a signal for what's to come. And you could see that squeeze firing off right here projected a nice move to the downside. And so although we're past the point where I feel like the squeeze is measurable, generally I like 6 to 8 candles on a squeeze. And so if we're on the weekly chart, that would be 6 to 8 weeks. We're already just about 10 weeks into this squeeze. So it can continue to fire to the downside, but I'm looking generally in that 6 to 8 candle period. All right. Let's take a look at SPY. So again, very similar to the DIA. The thing I forgot to drop here is a anchored VWAP right on that COVID low. You can see that's exactly where we stopped. Sorry about that. Forgot about that. All right, here we go. SPY. So we are on the weekly chart again. And similar to the Dow Jones average, we have our COVID low anchored VWAP anchored to that COVID low. And you can see that's exactly where we stopped. We also stopped from the swing low to swing high right at that 382 at 380. So that was my first target zone. We came into that first target zone. We dipped into it last week or 2 weeks prior. And then last week, we dipped even harder into it. And so we also came into a 618 retracement from that swing low to that swing high, and a 1618 extension to the downside from this B wave. I see this as an ABC retracement. So this is a really nice confluent zone that I was watching to see if we get a bounce out of it. And certainly we can. This week, next week, we can get a bear market counter trend rally right back up to that center channel, maybe up to 402, maybe up to 405. That certainly can happen, but we have to go into each day without bias. This market can continue to sell off. I mean, if you look at it, we're already, 7 weeks? 1, 2, 3, 4, 5, 6, 7. 8 weeks down, right? Let me, 1, 2, 3, 4, 5, 6, 7. Sorry, 7 weeks down. We're 7 weeks into the red. I believe I put out a post, I don't know if it was the DJI or maybe it was the Qs, that they were 8 weeks down. And no, actually, I think it was the DJI. And that's the first time it's happened in over 100 years. So, well, you know, it's interesting what this market offers. History never repeats, but it often rhymes. And you could see even on the COVID drop, it wasn't as sustained. I mean, it was a quick drop, but this is almost like, I know a lot of people are screaming. They would rather see this than this, because this is painful, right? This drawdown is really painful especially to swing traders, because it's a very difficult market to swing in. Especially when you're getting these quick intraday moves. It's been very, very volatile. So in any event, I digress. If we lose this level, if we lose 380, then I'm certainly going to be targeting target zone 2 down here in the 340 to 345 range. Why? Well, basically 200 SMA and also prior resistance here. Let's just drop a level just to see what that exact level is. So you're looking at somewhere around, 340. So that would be the area I would watch next. I mean, we would hit that 200 SMA first, but certainly we could back test this breakout level or this resistance level back here. But we're already pretty oversold. Again, looking at the COVID lows, we can get even more oversold. This is not an indicator to use where oversold is a buy and overbought is a sell. It doesn't work that way. We can remain overbought and oversold for a period of time. All right, let's go into our next chart. This is the Qs. So I already erased my target zone 1. That was pretty much right here. We hit that. Target zone 2 was in effect. We hit that last week. And we held 286. That was our 50% retrace from this swing high to that swing low. So if we do not hold 286, I would expect the 200 SMA to come into play right around 260. Again, very similar in terms of RSI, where we're in oversold territory, but we can remain oversold for a period of time. So I also will note that we've already lost the COVID low. And so what I did is I went back to the next major low, which is the December 2018 low. And that's what we basically hit last week. So if we have to go back even further, right? So we'll look and let's see what our next major low was. I would say, this candle right here. So let's drop an anchored VWAP on that and let's see where that lands. So that's much lower, right? So that's right at around 221. So yeah, I mean, if we don't start to see bounces, I think we continue to grind down. But keep in mind, in a bear market, we do get these violent bear market rallies to the upside. They will happen sometimes all at once. They'll happen in staggered names. So you just got to keep your eyes open and peeled. They are very tradable, but you have to be quick and nimble. Let's take a look at IWM. So IWM also very weak. You can see we're coming into prior resistance here and a 50% retrace, as well as the 200 SMA. So this zone, watch this zone here for a potential bounce. But yeah, looking pretty weak on IWM. If we fall below the 50%, I think that bodes really badly for the market. You also have this gap right here in the orange level. So I would target 152 to the downside if we break below 170. Next up is the the US dollar index. Ticker is DXY. And you could see we're coming into prior highs at 103.90. And so I would keep a close eye on this. If the dollar rises and continues to rise, it does not bode well for the market. However, you could look at this potentially as a cup and handle, right? So we might have our cup formed and maybe we get, some kind of handle forming, in the coming weeks. I think that would probably be, the best bet for the market, because that means if the handle is forming, then we're getting downward pressure on the dollar, which should mean that the market will continue, or the market will reverse and go higher. So keep a close eye on the dollar index in the coming weeks. All right, let's look at some sector names. This is XLE energy, looking pretty good here. It's been one of the stronger sectors for the last couple of months. So keep a close eye. I did have COP and CVX on the video that I sent out to our members. So those are two trades that I am watching for this week. Taking a look at XLU, we've seen some pretty good drawdowns here, 10%, 9.5%, 7.6%. This one was 14%. We could take a quick look and see where our drawdown is so far on this. This is at 9.8%. So keep a close eye on utilities for the next couple of weeks. We are basically at a measured pullback. We could continue to pull back to the 50 SMA or the 618 at 69.24, but we're in that range where we could see a reversal. We also put an inside week this week. So if we get an inside to the upside, watch some of these names here. Next up is XOP. This is oil and gas exploration and producers. So you could see we had a golden cross. It's still continuing to grind higher. You could see some of the names down here. OXY is a name that we've been in for quite some time. AR, Antero Resources, another one. COP also shows up on this list. So keep a close eye. These are the 2018 highs. I think we're going to continue to grind higher, I believe, into that. And you could see we've been riding this 21 EMA for quite some time as well. So, and any dips below the 21 EMA, you're getting caught right here by the 50 simple moving average in blue. So keep a close eye on XOP for the next couple of weeks and months. This is another one that I've been keeping a close eye on. As oil and gas prices rise, I think there's a renewed interest in, solar and other clean energy sources. So TAN is our solar ETF. You could also look at iClean, ICLN. That's another one. But this one looks like it's in a massive flag here. And we had a nice rally last week up to the center line. So yeah, we're above our 200 simple moving average, which I always like, but we are below a declining our declining 21 and declining 50 simple moving average. So keep a close eye on that. I would like to see RSI back over 50, but we did go back into a squeeze 2 weeks ago. So we're in that squeeze still currently from this last week. So I'm going to keep a close eye on, solar names and clean energy names over the next couple of weeks to see if we get a nice bear market counter trend rally to the upside. And then last, we're going to take a quick look at some copper plays. This is COPX. This is copper miners. You can see here, let's see, I think I have this actually on the daily chart. Yeah. So we keep coming into this level down here, this $33 to $34 level, and we keep bouncing off of it. So I would watch for, we're right now the COPX is coming into the 200 simple moving average. So I think, there's definitely a 20% move back to the upside if we can break through that level. And then CPER, very similar. It's got about a 13% move. We came right into that declining 21 moving average as well. We can go back up on the weekly and take a look at that. So you could see, bounces off of these levels. So something to keep in mind, if you're into copper names. I know in the past we've traded FCX, Freeport McMoran, and Southern Copper Corporation, SCCO. There's been a couple of other copper names that we've talked about. So those are definitely on my mind. But if you want a broader exposure, you can look at CPER and COPX. So that's my review of the sectors. Last week, we looked at consumer staples. They got absolutely wrecked. So we're not going to look at that this week. But yeah, there's going to be continued relative strength in the market. It's going to be harder to find because we still are seeing a broader decline in most ETFs and indices. But there's always going to be glimmers of hope in this market. There's always going to be names that are going to buck the trend. And that's basically my job, is to find them, report on them, and hopefully give you some actionable information that you can use with your own due diligence. So that's my broad market review for this week. I will catch you on the next video. Please, if you can, like and subscribe to my channel. If you enjoy this content, leave me a comment down below. Let me know what you think about these videos. Take care. Good luck in the market next week.